You need to start using smart money technique divergences when you trade, and this is how you will catch the big reversal moves. All an SMT is when we take a high on Nasdaq or ES and do not take it on the other instrument. As you can see on the left here, we have took the high on Nasdaq, but as you can see on ES, we have failed to take the high. Therefore, we have a bearish SMT. Now, all that means is when we get a sell set up, it is more likely to work. So with that information, we now have the bearish SMT. We also have a bullish fair value gap. So now, instead of taking long positions from bullish fair value gaps, I only look to take shorts from them. As you can see on our next candle, we get a candle close below this bullish fair value gap. Therefore, I will enter into a short position. My stop loss will go if we get a candle close back above this inversion fair value gap. And then my take profit will simply be this first internal liquidity right here, and then I will hold runners for much lower. But as you can see, our first take profit gets smashed straight away, and then you can hold runners further below. This is my 80% win rate day trade. The most common mistake new ICT traders make is actually look at liquidity on the wrong time frames. Right now we are on the 2-minute time frame. We do not need to look for liquidity sweeps on the 1-hour time frame, on the 4-hour time frame. The 1 minute to 5 minute is a perfect time frame to find these liquidity sweeps. So as you can see right here, we have swept this sell side liquidity. Therefore, we are now interested in looking for long. We are not going to short this bearish fair value gap. Instead, I'm actually going to use my 80% win rate day trading model, where I actually long off inversion fair value gaps. So we get the candle close right here. Therefore, this fair value gap has just turned into an inversion fair value gap. I enter on the candle close above the fair value gap. My stop loss is a candle close back below this bearish fair value gap, and then my take profit is buy side liquidity. Now, this is a very good risk to reward, and as you can see, this is a 80% win rate day trading model that I trade every single day live in my Discord. So if you want to watch me trade live and trade this model, then make sure you join my Discord. The link is in the description. If you want to be able to read where price action wants to go most of the time, then all you need to trade is fair value gaps. Now, stop trading fair value gaps wrong. If you trade fair value gaps like you have been taught by only shorting from bearish fair value gaps, yes, you can make money, but you won't find nearly as much probability. Whereas if you wait for fair value gaps to be disrespected and use them as inversion fair value gaps. As you can see, we have this bearish fair value gap. Now, don't be interested in taking a short from this bearish fair value gap. Only be interested in longs from bearish fair value gaps. And the way that you do that is you wait for a body of a candle to close above the bearish fair value gap. Now, with this information, we can expect price action to come up and take some sort of buy side liquidity. So what I will do is enter into a long position on the candle close above the bearish fair value gap. My take profit will simply be some sort of buy side liquidity resting above, and then my stop loss will be if we get a candle close back below the fair value gap. And as you can see, this strategy works very well. It has over an 80% win rate. I trade it live every single day in my Discord. You will not be able to unsee this day trading strategy where I was able to call a 200-point move live on Discord. Now, the first thing that you need to do when it comes to trading with fair value gaps is, instead of opening long positions from bullish fair value gaps, what you're actually going to do is do absolutely nothing when price action comes into the bullish fair value gap. You are going to wait for the fair value gap to be disrespected and get a candle close below the bullish fair value gap. So as you can see on this next candle, we get a candle close below this bullish fair value gap. Therefore, I can enter into a short position. My stop loss will go if we get a candle close back above this bullish fair value gap. And then my take profit will simply be this internal liquidity resting right here. This can be your first take profit. Then for your next take profit, you're going to target your data lows that are resting all the way down here, which is 200 points away. The reason why we target this data low is because it is an extremely strong draw on liquidity, as the low was created from when news happened. Now, with this strategy alone, I have over an 80% win rate. I live stream every single day completely for free on my Discord. If you want to watch me, the link is in my Instagram bio. I have over an 80% win rate, and all I do is trade fair value gaps and liquidity. Now, I don't trade fair value gaps the way that you and most people trade fair value gaps. Instead of taking short positions from bearish fair value gaps like this, what I actually do is I only look for long positions, and the way I do that is I simply wait for the bearish fair value gaps to turn into inversion fair value gaps. As you can see, we have swept sell side liquidity that was resting here. We also have this bearish fair value gap. Now, as I just said, I wait for the bearish fair value gaps to be disrespected and inversed. So as you can now see, we have a candle close above this bearish fair value gap. Therefore, I will enter into a long position on the candle close above the bearish fair value gap. My stop loss will go if it gets a candle close back below this bearish fair value gap. Then my take profit will simply be this buy side liquidity resting right here. Now, this is a simple strategy that I use that I have over an 80% win rate with, and as you can see, my take profit is smashed. You will not be able to use fair value gaps normally after you watch this video. As you can see, we are currently in a 2-minute bearish fair value gap. As well as that, we are also reacting from this big blue bullish fair value gap. Now, instead of looking to short from bearish fair value gaps like this that most ICT traders have taught, what you should actually do is use fair value gaps as inversion fair value gaps. Now, all that means is you wait for a candle close above this fair value gap, exactly like this. As you can see, the body has closed above this fair value gap. Therefore, I will now enter into a long position because I can expect that price action wants to take some sort of buy side liquidity. And as you see right here, we have these relative equal highs that are an extremely strong draw on liquidity. And as you can see, these relative equal highs have been smashed, and this was a perfect take profit.